Take a look at the Singapore equity benchmark today. STI down 0.3%, same direction as the rest of the region, but not as much in terms of the losses that we are seeing. Let's take a look at property counters as fresh property cooling measures just announced overnight. They take effect today. Right now, city developments down 2%. UOL Group and CLI also in the red. And with the tighter limits on housing loans in Singapore, this might have a knock-on effects on banks. But we're seeing DBS shares, OCBC shares, as well as UOB well in the green this hour. Now, to talk more about this, let's bring in Kian Soon, his CEO and fund manager at Astral Asset Management, joining us from Singapore. Good morning, Kian Soon. Thanks for joining us. So you heard there property cooling measures from Singapore in an environment where interest rates are rising. And what will be the impact, you think, on the Singapore property market and on property prices?
I think as we have saw, with the announcement, most of the measures are predominantly centric on the HDBs. And, the tightening of the borrowing limits also ultimately will impact the private housing. But I think overall it's a good measures because the interest rates environment is expected to continue hiking. And this measure will be prudent. In the short term, I think it will cause a bit of the prices to be more stabilized versus what we have seen, rapid rising in terms of housing prices in the last year. And I think it will also impact short term on the developers' share prices for the time being.
Yeah, and these rising interest rates, if we take a look at the Singapore economy broadly, how prepared do you think the country is to face these financial conditions, higher interest rates, higher mortgage rates? What will be the effect on growth in the year ahead?
I think Singapore is in a good position because our environment, inflationary environment, is not so severe. At the same time, I think we are reacting well to the rising interest rate environment, which is predominantly led by the central bank in the United States. So the Fed policies ultimately will have an influence on Singapore policies. But so far, I think we are reacting well. We have the COVID recovery, in our economy, but we need to be vigilant going forward, looking at how these inflationary figures as well as interest rate hikes will continue to impact us.
Yeah, and these interest rate hikes are really driven by the U.S., and we're seeing these policy responses that are not typical. Major interest rate hikes, FX and bond interventions in different parts of the world. What does this tell you about the environment that we are in and how prepared different governments are to tackle the environment?
I think the reality after we have witnessed in September is an environment of wild swings and volatility in the global markets, reacting to the Fed's hawkish interest rates actions. The other central banks in reality are all playing catch up. They are reacting because their economy is in different stages. And some of these countries do not have the comfort to raise interest rates at the rate that the Fed is doing, while some of the countries, have other limitations or fiscal policies that are, in contradiction. So it'll be interesting to see that, the currency fluctuations because, as interest rates rose in the United States, the US dollar is going to be very strong, while you could see developed nations' currency as well as emerging markets' currencies being badly hit.
Mm-hmm. And today, yesterday, past couple of days, we're seeing this turmoil in the UK financial markets because of the tax cut that was announced, and the UK currency, bonds, all been battered. How worried are you of a contagion of financial market crisis in the UK to other parts of the world?
I think overall the outlook for Europe as well as UK has been rather negative. Investors have been very cautious or risk averse to the region, mainly because there was a Russia-Ukraine war that has been ongoing for a couple of months. At the same time, for United Kingdom, the recent policy announcements have basically caused a lot of concern, mainly because it's a fiscal policy announcement that basically it's a fiscal policy announcement that cut tax, but something that they couldn't afford, and that causes a wild swing. But I think it's pretty contained to United Kingdom for the moment. Apart from currency swings for the sterling, I think the impact or the spread to the regional markets in Asia are very limited.
Yeah, thanks so much for that, Kian Soon. Appreciate your insights there. Kian Soon there from Astral Asset Management.